I wanted to show you the currency strength indicator and the currency matrix working in tandem, just to show you how they complement one another. On the left hand side is the currency strength indicator, and I've got that set to a 15-minute time frame. Let's pull that up a little bit. There we go, that's on 15. And then this one, the currency matrix, I've got set to a 10-minute time frame. What we're seeing right now is heavy selling of the dollar, which is the red line, so you can see how steep the inclination is. So there's a lot of dollar selling going on right now on this particular time frame, which means there's going to be some nice trends developing in the pairs. And the question is, where do you go and look for those trends? And what you can see coming from the other way is from very strongly overbought down here, these two commodity currencies, the Aussie, the blue line, and the New Zealand dollar, the grey line, both rising very strongly. So without even looking at a chart, but what the currency matrix tells us, certainly on the similar sort of time frame, is that's the reason we've got the Aussie dollar at the top here, because we've got the Aussie, which is rising very strongly, and that is counterbalanced by the dollar, which is selling very strongly. So it's no great surprise to see the Aussie dollar at the top of the currency matrix. But what about all the other pairs? Are they moving in the same direction with the same degree of momentum? And the short answer is no, because if you look at the Aussie yen, that one is, because we've got the Aussie rising and the Japanese yen falling, and that's the reason that the Aussie yen is also up here with a pretty strong trend on this sort of time horizon. But if you look at lower down the matrix and go and search out the other Aussie pairs, in fact what I'll do is I'll just isolate them out for the Aussie. Let's take out the Aussie here. So we'll just isolate out on the Aussie. Just click that OK. So that will now pop up with just the Aussie pairs. Okay, so what are we seeing in terms of what is going on across the matrix, the Aussie matrix, the 7 Aussie pairs? Are they all moving with the same degree of momentum as the Aussie dollar and the Aussie yen? And clearly what you can see down in the middle here, we've got the Aussie New Zealand, which is hopping around quite a bit. But the question is, why is it not following the rest of the general broad sentiment? And the answer lies over here, because when you look at the Aussie, and it's just shooting up as I'm talking there, as you can see, the Aussie and New Zealand, they are both climbing very quickly indeed. Now, they are both traveling in the same direction, and what that means is there's very little trend there. So in terms of opportunity, that's not going to be a pair that you're particularly interested in. And you could tell that immediately just by looking at it from the currency strength indicator. But that's the reason when you look at the matrix and you're looking for the sentiment towards a particular currency, because if you're trading, if you're buying Aussie or you're buying Aussie dollar, buying Aussie yen, what you want to know is the rest of the market per se buying the Aussie? And that's what the matrix also tells you. Because if they are, then effectively we'd need to see the Aussie New Zealand up here. All of these would gradually move up to the top. Down at the bottom here, we've got the pound Aussie. Why is the pound Aussie at the bottom? Well, if you look over on the CSI, because the pound's been selling off pretty strongly. It's been selling off since 2 o'clock, so it's been selling off pretty much the whole of the afternoon here. Lifted a little bit, it's carried on with the bearish sentiment. The Aussie was at that point, had you looked at the pound Aussie chart at this particular juncture, then you would have seen congestion, because at that point the Aussie is following in the same path as the pound, and therefore there is little in the way of forces which are acting in opposition to one another to really drive a trend, a strong trend on that particular chart at that particular time for that particular pair. But then as soon as they separate and you get this very strong buying of the Aussie, but the selling of the pound continues, that is why the pound Aussie is down at the bottom here. So when you look at the two indicators, they are very complementary. The CSI is always the starting point. You have the matrix up alongside, which really gives you a heads up as to what is going on. Is the sentiment you're trading, if you're buying the Aussie and selling the dollar, is that broadly the sentiment for the market? In other words, are you traveling in the same direction as the broad flow? And in addition to that, clearly you wouldn't be looking at the mid-table ones here, the Aussie New Zealand, for example, until these two currencies had separated and were then moving in opposition to one another, in which case a trend would start to develop. So it's really a complementary way of having the indicators, starting with the CSI, having the matrix up. The matrix tells you an awful lot. And remember, the matrix works very close to the market. The currency array works a little bit slower, works a little bit stepped back from the market. But the currency matrix really delivers all this information for you. And to say, if you're trading one of these Aussie pairs, great, because the sentiment is pretty much broadly buying the Aussie right now in this time horizon. And really what you want to see is these two join up to the top of the ladder, and then you've got a full house. Ideally, you want to see this one move up as well, but that's not going to happen whilst the New Zealand and the Aussie are being bought together. It's just going to stay mid-table, and that's the reason it's sitting there. Just to remind you that on the currency matrix on TradingView, we now have this option up here, which has been added. It's really exciting to have this now because it gives you a flavor of where this particular currency pair is in relation to the extreme on the ranking ladder. You can see that we're actually hitting an all-time high here. And you can also see the average is really quite low. It's a long way off this figure of 81. It's down at 31. So what that tells you is this is a really extreme move. Yes, it's a great trend at the moment, but be aware that this could well reverse because this is at an extreme. It's at an all-time high, whilst the average is only 31. And down at the bottom here, it's not quite so pronounced, but nevertheless, we're also at an extreme of low down here at minus 46. Whereas the average is 25. So again, this is an extreme, if you like. We are at a very extreme point, and therefore what you expect in this industry, in this market, is for a mean reversion to occur, and therefore you'd now be looking at potential for a reversal on this opportunity. So I just wanted to record this video just to show you the two indicators in action together. Hope you've enjoyed it. Thanks for watching. See you again soon, and bye for now.